landmark movement as Indegene is the first healthcare domain-focused tech services company to list in the Indian capital markets, a domain driven by a large TAM and in need for specialized services. They have a strong track record of more than 2 decades, combining deep healthcare expertise with modern technology capabilities. Indegene is also backed by marquee investors such as Carlyle, Triton Park, and Nadadur family offices. Just to highlight on the IPO structure, the IPO opens on 6th May, closes on 8th May. The anchor opens and closes on 3rd May. The overall issue size is 1842 crores, out of which 760 crores is primary and 1082 crores is OFS. Price band is 430 to 452 and a bid lot of 33 shares.
Enterprise Commercial Solutions is 59% of our revenues, as you can see, the largest segment. The one below it is Enterprise Omnichannel Activation Solutions, which is 12% of our revenues. If you add these two, it becomes 71%. Take a few percentage from others, right? So just north of 71 and add it to this. So north of 71% maps to sales and marketing on this slide, right? Which means more than 71% of our revenues comes from helping pharmaceutical companies do sales and marketing with a digital first approach. 23% of our revenues comes from helping pharmaceutical companies manage regulatory affairs, regulatory and medical affairs, box 2 over here, and pharmacovigilance with a digital first approach. The remaining few percentage in others is on the clinical development side, right? That's a new initiative within Indegene. Grow, you can see this slide, it's just, we believe, doing more of what we have been doing. It's a very large market. We believe we are still scratching the surface. It's very early days. Areas we are operating in are very large, right? So we're not doing anything new. Obviously, we have to strengthen, do things better, more efficiently, more effectively, and we'll continue to do that. We have a strong customer base. Growing and mining that customer base is going to be a priority area. Of course, we'll expand into new customers as well, but growing our existing customers is a very important area. We'll continue to invest in technology. We'll continue to do acquisitions and focus on operational efficiency. All in all, this can be summed as doing more of what we've been doing it better, more efficiently and effectively.
The revenue has grown from a little under 1,000 crores to north of 2,300 crores for our year ending March 23. So a growth of 2.4 times, a CAGR of 54% from a revenue perspective. Even in the fiscal year ending March 24, for the 9-month period ending December 23, we have grown to 1,916 crores, which is a growth of 15% year on year from a corresponding 9-month period in the previous fiscal year. And while we have grown our revenues in this 9-month period at 15%, if we could go to the next slide, please. Our margins have grown at a faster pace. The EBITDA margins have grown to 419.9 crores, a growth rate of 22%, which is faster than the growth rate of our revenues, and margin rate, which is very close to 22%. The margin rate itself, what you can see here, FY21, which is March 21, this period, as you would recollect, was the year of COVID, has its own intricacies. We clocked 27%, but cost savings and the like, if we keep those intricacies aside, right, what I would like to emphasize on is the growth in margin as a margin rate from 18.8% to 21.9% over the 2 years following COVID and the 9-month period of the latest fiscal year, right? So through this period, we have focused not just on growing the top line, but growing profitably and that reflects in the growing margin rate, which is now very close to 22%. While we have grown our EBITDA margins, and also generated significant cash, as you can see through the period on the rightmost chart. Our PAT margins have trended growth at a slightly lower pace, especially in 2022. We did an acquisition and we took on certain debt on our books, and as you would understand, over the last few quarters, the interest rates have gone up, right? And the interest cost has therefore increased, which has brought down the margin rate a little bit from 13% to 12.6%. And the public offering of 760 crores is meant, a portion of which, the 391 crores to be precise, and $47.2 million in dollar terms, is the loan taken by our subsidiary to acquire a company back in 2022. We propose to utilize the proceeds towards retiring the loan, and therefore we should become a zero debt company and a zero interest outflow going forward post retiral of the loan, which should impact this favorably, and also have a similar impact on the PAT rate as we have seen growing our EBITDA rate. So to finally sum it up, margin-wise, growth-wise, we've had a strong growth. We focus on not just growing, but growing profitably. With significant margin improvement through the period, and cash flows to substantiate the margins. And what we aspire is to sustain and build on this kind of a margin profile that we have.